Hi, everybody. It's December 16th, the market update desk with Scott Riley. And we got a barn burner of a week this week. Let's go through what's going to be happening this week. Now, one of the things that's happening this week is the Fed meeting, and the market is up to a 97% chance now of a 25 basis point or quarter point rate cut. Now, on the surface, that sounds great, but when we dig deeper into the week, we might be getting some pressure on bonds, which could actually give us some upward pressure on mortgage rates. Now, one of the reasons for that is within the Fed meeting this week, we're going to get the summary of economic projections, which includes what's called their dot plot. Now, this is where the Fed members anonymously chart out where they think rates are going to be for not only the rest of 2025, but 2026 and also 2027. And it goes into what their expectations of GDP and unemployment are for the upcoming year. Now, the previous dot plot that we got on September 8th showed the potential for, or a consensus of about a 1% in rate cuts in 2025. But it's expected, unfortunately, that the Fed's likely going to take away one or two of those rate cuts because we've been having tough sledding on inflation. Now, when we get that, that's going to potentially put upward pressure on the 10-year bond market because it's not going to like that taking away of potential rate cuts. Now, the X factor, there is something that could come positive from the Fed meeting within their Q&A, is that they might make mention of stopping their balance sheet runoff in 2025, which means the Fed would have to start reinvesting in more treasuries, meaning they're going to let fewer treasuries fall off, which means they could want to add to the treasury balance sheet because we've had quite a run of sell-offs or runoff in the balance sheet. Now, we may not get a lot of definitiveness on that, but that's one thing that we're hoping to see. But most likely, we're going to see the bonds come under some pressure. Now, what's going on for the week is going to be Tuesday retail sales, and that's going to be a very closely looked at number. Wednesday, we're going to get the Fed meeting, and it starts permits and completions for new builds. Thursday, we get final Q3 GDP data, again, very important, and then existing home sales data. And then Friday, we're going to get the very, very important PCE report, personal consumption expenditure. That's the Fed's favorite measure of inflation. Let's look and see what we're going to kind of be expecting. Now, the market's looking at an expected month-over-month increase of 0.27, but the challenging part is the replacement number, meaning what we're falling off from last year, was a negative number. Negative 0.01. So no matter what we're going to get with this month's reading, it's going to tick up the year-over-year number. Previous last month's year-over-year PCE headline number was 2.3%. The market's expecting that to increase to 2.6%. Because of the fact we're losing that negative number, we're going to be replacing with a positive. Now, the core, which the Fed looks at even more than the headline number, month-over-month estimates, 0.26, but the replacement number was 0.09. Once again, got some headwinds there. Year-over-year last month was 2.8%, and the market's planning on it coming in at about 2.9% to 3%. It's going to be very, very closely looked at. This is going to put the week in a lot of volatility, so be very careful with what's going on out there in the market. If you're looking at buying a home this week, make sure you're in contact with us to get pre-approved, help get some mortgage advice on what the market's doing to potentially save you money on being proactive as far as locking your rate rather than reactive. And that's why it's so important to work with a lender that understands what's happening in the financial markets and can explain that to you so that you can make the best decision for your family. Give us a call, 616-293-2189. We can go in more depth in this, go over why it's so important to be buying now versus in the summer to put you in the best position. Hope you have a great afternoon. Scott Riley, the Market Update Desk, your original singular market news source for West Michigan.